What's up guys? Now today I'm going to be putting $5,000 of my own money where my mouth is. Well, let's go. On this channel, I speak about lots of different investment options. So today I'm going to be putting $5,000 of my own money into 7 different investments. When it comes to investing, your risk profile greatly determines the amount of risk that you should take with your investments. And in today's video, these investments are going to vary in risk from 1 up until 10. I'm going to start off with the least risky investments and we're going to work our way up to the most risky. And if you can guess what any of these might be, drop a comment down below. Now, the general consensus is the younger you are, the riskier investments you can afford to take. That's because younger investors have more time to recover any possible losses by generating more income. Having said that, I'm going to be looking at 7 different investment options today, so whatever your risk profile is, there's going to be one for you. And guys, please consider giving this video a like and subscribing to my channel. It helps me reach more people and it would make my day. If you are interested in investing but don't know where to start or don't know which app or platform to actually use, check out the links down in my description. If you sign up today using these links, you'll get a free share with up to £200. So there's basically no reason not to do it. All right, now first up is a normal savings account. This is something that you probably already have at the bank. Now, I did say that we're going to start at a very low risk level, and this is a pretty boring one, a pretty bad investment, but it's where most people keep the majority of their savings. And as far as risk goes, I'm going to give this a 1 out of 10. I always say that keeping your money in a savings account is the worst investment that you can make, and it pretty much is. But it's also one of the safest places you can keep your money, where you can access it immediately. So for that reason, I always make sure that I've got between 4 and 6 months worth of living expenses kept in my savings account. I first heard about this idea from Dave Ramsey, and he calls it the emergency fund, and one of the first steps to take when planning your finances. All right, so for the purpose of this video, and so that we can track how much that we actually make down the line, I'm going to invest £500 into an old savings account that I no longer use. You can shop around for a high yielding savings account if you plan to use this as a long-term investing strategy, but for the purpose of this video, I'm just going to use a standard one because that's what most people have. Okay, so here we go. I'm going to put £500 into my savings account, and there we go. So as you can see, I've deposited £500 into my savings account here with an interest rate of 0.01%, which is appalling. All right, now next up is bonds. Now bonds can contribute an element of stability to any investment portfolio. And especially in times of stock market volatility, they can be a great investment idea. Just take a look at this graph showing the performance of bonds versus stocks during the stock market crash of March last year. In terms of the risk profile for bonds, I'd say that they're still very low risk, either a 1 or a 2 out of 10, and they're a great investment long term. Okay, so the platform that I'm going to use for this investment is my Vanguard Investor account. I'm going to put £500 into the Global Short-Term Bond Index Fund. This is a passive fund that aims to track the performance of the Bloomberg Barclays Global Aggregate. It includes global government, government-related agencies, corporate and securitized bonds with a maturity of 1 to 5 years. Next up then is gold, and this one gets people really excited because it's just so shiny. But seriously, whilst investing in physical gold is one way to do it, it's not how I'm going to invest today. Instead, I'm going to be buying £500 worth as a commodity. And the way that you buy this, the way that you trade this, is very similar to trading and buying stocks. And that's actually really cool if you think about it. And a lot of people don't actually realize that this is a way that you can invest into gold. The risk level for this one, I'm going to give either a 3 or a 4 because gold, especially in times of uncertainty like the coronavirus pandemic that we're experiencing, is considered a safe haven. It's great for those who are looking to shelter from more volatile investments like stocks. Just look at the value of gold over the last 12 months. Sure, it took a fall in March, but it recovered much faster than the stock market, and it has continued an upward trend since. Now, I'm going to be buying £500 worth of gold on my Revolut account. And as I said, I'm not going to be getting a delivery of £500 worth of gold bars. 1, because that's nowhere near enough for even 1 gold bar. And 2, that's just not how it works. Instead, my account will be credited with the corresponding value based on what the market's doing at the time when my transaction is executed. What is cool though is that Revolut do actually buy and hold the physical thing. They do actually buy gold in bars and they hold it. But yeah, they don't ship it out to people like me. Lastly guys, people may look to offload their gold for profit in times of uncertainty. 1, to cover losses that they may have experienced elsewhere, and 2, because of the emotional roller coaster that is investing. However, if you can control your emotions and invest without your emotions taking over, then the chances are gold is going to be worth buying over keeping your money in cash, because over time, gold tends to outperform inflation. All right, so let's jump into my phone and purchase £500 worth of gold. So this is my investment account here on Revolut. If we jump into commodities here and click invest, in gold, it's probably going to ask us to buy. It's probably going to ask us to accept the T's and C's because I did this earlier just to check. So £500 worth, buy now. Yep, so I've already read these, accept and buy. And there you go, £500 has been bought. If you want to know more about buying and selling gold, I made a whole video on the topic, which you can check out somewhere here. But maybe just wait until the end of this video, open it in another tab and check it out later. Okay, the next investment that I'm going to be putting £500 into today is an ETF, specifically the Vanguard S&P 500 ETF. What this is a fund that tracks the performance of the 500 largest publicly traded stocks in the USA. This is a great investment for beginners who want to get started in the stock market but don't feel ready to start buying individual stocks yet. The risk level for this one is a 5 out of 10 because whilst it is a somewhat diversified way to invest in stocks, the fact is we're still buying stocks. This means that its value can be affected by daily stock market movements, political and economic news, as well as company earnings and significant corporate events. It's also concentrated in the US, so it's more sensitive to any local events. Past performance of this stock between 2013 and 2019 has averaged 15% return. And what's more, say you had invested $100 a month into the S&P 500 for the past 20 years at an average return of 15% with annual compounding interest, you'd now be sat on over $120,000. And you would have only invested $24,000. So almost multiplying your investment by 5 times. After 30 years of investing $100 a month, you'd be sat on $528,000 and you would have only have invested $36,000. As you can see, the returns become exponential over time, and that's because of a thing called compound interest. Okay, so let's go ahead and buy £500 worth of Vanguard's S&P 500 ETF. The way I'm going to do this is using an app called Trading 212 on my phone. It's free to download, it's free to sign up to, so if you want to, go ahead and check the link in my description, sign up, you'll get 1 free stock if you do so today. And guys, I won't get anything out of this deal because when sharing this referral link, you can only get up to a certain number of free shares. And I've already received all of the free shares that I can. So the only people that are going to benefit from clicking on those links is you. Okay, so let's jump into the app, go ahead and make the purchase. So there we have it, the Vanguard S&P 500 ETF. Done. If you scroll down there, you'll see pending orders, £500. When the market opens, my order's going to go through. Lastly, when you're investing in stocks and ETFs as well, it's best to do so in a way that less exposes you to the taxman. In the UK, the best way to do this is by investing in an ISA account, which is a stocks and shares investment account. It allows you to earn tax-free profit on your investments up to a value of £20,000 a year. Different countries have different accounts. For example, in the US, it's called a Roth IRA. So just check out whatever it's called within your country. The fifth way then that I'm going to invest £500 today is in a dividend paying stock. And I talk about this in much more detail in some of my other videos, but for the purpose of today's video, I'll just quickly explain what a dividend stock is, which is basically when you buy shares of a company that pay out dividends. And a dividend is a share of the profits that a company pays to its shareholders, which is you because you're buying a share of that company. I'm going to give this a 6 out of 10 in terms of its risk profile, because we're going to be buying individual shares of a company. However, it is slightly less risky than buying a non-dividend paying individual stock because it pays out those dividends, which could help to offset any potential losses and obviously brings in that passive income for you as well. Now, in terms of which stock I'm actually going to invest in here, I'm going to jump back onto my phone and I'm going to increase my position with AbbVie. So if I click on this here, go through and click buy, this is on the Trading 212 app, value £500, review order. This is a stock that I already own and I'm just increasing my position with it. So I'm going to send the buy order there, and there you go. Stock market is currently closed in the US, so that order is going to go through as soon as the market opens. There it is. Dividend stocks are my preferred way to invest. It matches my risk profile pretty well, and I'm all about that passive income. And building an investment portfolio that pays you profits, as well as creating other sources of income, is the way to go. All right, next up, I'm going to invest £500 into an individual stock. I'm going to give the risk level for this investment a 7 out of 10. Obviously, it's going to vary from person to person, but on average, for the average investor, I'd say it's a 7 out of 10. Now, stocks offer an insane opportunity for anyone to profit from any company without getting involved in their operations even a little bit. If you actually take a minute to think about it, it's pretty crazy to think that we have the opportunity to so easily invest in some of the world's biggest companies like Amazon and Tesla, run by the 2 richest men in the world. The reason that companies sell their shares is to raise capital for their business. And if they didn't raise the capital this way, they'd have to take out loans and you'd have to pay interest on those loans. Whereas selling shares means that they don't have to make any repayments and it's much healthier for their cash flow. Now, even with the uncertainty surrounding coronavirus and the potential pending market crash, I've continued to invest in particular individual stocks on a monthly basis. However, I haven't been making any spontaneous buys. So this is a bit of a one-off for me, and for that reason, I thought I'd invest in something new. Now the stock that I'm going to buy £500 worth of today is called Etsy. And for anyone who doesn't know what Etsy is, it's an online market space for companies and individuals to sell products. One of the reasons that I've chosen Etsy is because they have the ability to change gears really fast and react to changing environments, which is one of the reasons that they've done so well in 2020. Now I'm not going to go through all of the fundamental analysis that I've studied to arrive at this decision in this video, so instead let's just go ahead and make the trade. Okay, so I'm going to jump back into my trading account here, click on Etsy, which I added to my watch list earlier, make a buy order of £500, review order, wait for it to load, there you go, 3.3 shares, £500 worth at market buy. I'm going to send that buy order now, and there you go. Still pending, but it should go through any second now. Right, now today's last investment, the most risky investment that I'm going to make today is Bitcoin. I've got to give Bitcoin a 9 out of 10 in terms of risk. It's one of the riskiest individual investments that you can make. Bitcoin is a digital currency created in 2009, and with the exception of its price rally in 2017, has remained pretty much an unused currency or unused commodity as some people refer to it. However, since March last year, it has seen its value go from $5,000 to over $40,000. So if I had invested my £500 12 months ago, it would now be worth £4,000. That's 8 times my investment, which is just mental. Now, there are experts out there backing Bitcoin, but there are also experts out there who are less optimistic about it becoming mainstream into the world that we live in. My opinion is that there are some great arguments for it, but also some caution to be taken when considering things that might hold it back. And as well, for me, even though I usually edge towards less risky investments, Bitcoin has got me hooked. Unlike our existing currencies, which lose value over time due to inflation, Bitcoin basically has zero risk of inflation. And that's because it was created with the sole purpose of it being finite, which means that there's a limit on how much of it can be created. And that number is estimated to be 21 million. And to put that into a little bit more perspective, as of today, 18.5 million Bitcoins exist. I get that when it comes to actually buying Bitcoin, a lot of people don't know where to start, and they don't know where to store it safely. You can't buy it in a Vanguard account and store it in your ISA or in the USA in a Roth IRA, or at least not yet you can't anyway. There's a couple of platforms out there that are good for buying Bitcoin, Coinbase being one of the most popular ones. However, I've also heard that people using Coinbase have had trouble accessing their accounts recently. Not something that I'm personally aware of because I don't have an account with them. I choose to invest in Bitcoin through my Revolut account. All right, so now let's jump back into my Revolut account and purchase £500 worth of Bitcoin. So I'm gonna invest £500 worth and buy now. There you go, you bought 0.01 Bitcoins. Now I own £3,153 worth of Bitcoin. All right, so there we go. I've invested £500 into 7 different investments. That's £3,500, $4,800. I admit that I said $5,000 in the title of this video and I'm $200 short. So I hope that you'll let that slide. In a couple of weeks, I'll be making another video to show you guys how much I made or potentially lost on these investments. So if you're watching this video in the future, when I've already posted that video, I'll leave a link up here somewhere. Lastly, the other best investment that you can make is to invest into yourself. And by this, I mean studying an online course. These days, it's so easy to do, but so many of us feel like spending $100 or £100 on a course is just too much. It's sad to think though that when it comes to having a night out, £100 or $100, we just spend it like this. All right then guys, that concludes this video. Thank you for watching. If you are interested in finding out how much I've either made or lost on these investments in a couple of weeks when I post my next video, please make sure that you're subscribed, give this video a like, and I'll see you next time.